Hey everybody, Economic Ninja here. I want to talk to you today about what I see as something that is coming right over the horizon that I think can actually cause quite a contagion and a very serious issue for United States homeowners, okay? And that is what's going on with Evergrande. I'm going to put a couple of pieces of the puzzle together, and but what we're going to do is we're going to start here, okay? I'm going to show you a headline that came out of a website a little while ago. How foreign purchases of U.S. homes impact prices and supply. And right here it talks here, foreigners buying U.S. homes potentially exacerbate that problem of affordability. Keys continued, Chinese buyers have led foreign investment in U.S. homes for the past 7 years. In 2019 to 2020, they bought U.S. home properties worth $11.5 billion, or a little more than a sixth of the total, according to a report from the National Association of Realtors. I'm sure if you click on that, you're going to be able to reference it right there. Now, that is where I want to start. The fact that China has been a huge part of the run-up in homes and apartments in America for quite some time, okay? But when it wasn't really being talked about until it was too late and inventory had dried up and those Chinese buyers were still there buying up properties. Now, we're going to talk about this next. This is where it gets serious. Chinese property developer Cynic halts trading after sinking 87%. Now, why, you might ask? And that is because right now, Cynic is a property developer in China that stays in China. This company itself does not invest in the United States. But what's happening is they are getting sucked into the entire story of... no, not that one. You don't want to buy a Samsung, do you? Let's do this. Let me find it. Here it is. Shiza. Let's go to Twitter. We're going to back out real quick here. And we're going to start with this one. It's getting sucked into the whole Evergrande story. All right. So I'm going to show you how contagion can get even worse. Right here's a tweet. And this is, I'm giving credit right here to Wall Street Silver. Jim sent this over to me. He actually sent me a few tweets we're going to go over. It says Evergrande already having an effect in Australia. Iron ore futures dropped 6.1%. It says every US $10 the price of iron falls, nominal GDP decreases by $6.5 billion. That's huge. It says media saying Chinese real estate investors may liquidate properties in Australia to stay afloat. So that is your rumor right here, right? And you can see the prices of iron ore falling in tandem. The timeline is pretty phenomenal, right? Okay, so here's something that I believe could happen. Chinese officials right now are trying to stop this this from getting worse, and it's getting bad. If you're already seeing other property firms, construction firms in China, their shares being halted because they're plummeting so fast, this is going to get ugly real quick. The one thing that China does not want to see done is if Evergrande needs to start liquidating real estate, and they own approximately 2% of all the real estate in China. That is mind-blowingly huge, okay? If they start to liquidate real estate in an already extremely fragile, bearish real estate market in China, it could cause real estate to collapse. So what does one think that China might do? They might go to them and say, all right, we know that you have holdings outside of the U.S. We want you to liquidate those first. And what I believe you're going to see, and this is going to happen throughout the entire industry, even if Evergrande, let's say, does not own any specific real estate in America. We're already seeing the contagion effect, and we're going to click right here on this. And this is that sync. This came also from Wall Street Silver, but I believe this was Kyle Bass's original tweet. And he says right here, the chain reaction of Evergrande's falling. This is what sinks another Chinese real estate developer stock looks like right now. Down 88%, literally falling off a cliff until it was halted. Trading was halted. All right? That is staggering. Well, what's happening is, just so you know, Sync is not the only company that is or about to go through this right now. And those other companies do own real estate. Neither Sync or Evergrande own real estate in America. Well, I can't talk for Evergrande. I'm talking about Sync. But these other companies are about to go through the exact same effect, where even if they have the most solid balance sheet in the country, it doesn't matter. This is akin to what happened in 2006 to 2008, when if you were a lender, even if you had a solid balance sheet, if it was known that you had mortgage-backed securities on your books or you did any lending in the NAGAM territory, negative amortization, things like that, you were deemed the enemy and no investor wanted to touch you. The problem is a lot of these companies rely on debt to continue operations in like a continual cycle. They take on debt, they buy properties, they either flip them or bring in cash flow to pay off the debt, to service the debt. And so what I believe you're going to start seeing in the next couple of weeks is the directive. And this is going to be done very stealthily. We're going to have to watch real estate numbers, the amount of homes that hit the market. But I believe that you're going to see the Chinese government step in and go, look, we want you to start liquidating properties out of China right now. We need to maintain the Chinese real estate market. And so it's going to put up a lot of properties on the market. Now, there is a way they can do it without actually doing it. And that is they can go to other banks, very similar to what happened during the crisis of 2008 when the Federal Reserve and the Treasury Secretary was, the head of the Fed and Treasury Secretary was going from bank to bank saying, hey, who's going to bail out Lehman? Who's going to take their bad debt? And they can do these off-book transactions where even a United States firm, if you guys were following the 2008 crisis, Lehman was trying to get overseas Asian investors to move in and pick up a bunch of their debt to their struggling mortgage-backed securities portfolio. And this could happen here where an American firm is contacted by a Chinese firm saying, hey, look, we need to liquidate these properties right now. We'll give you a little bit of a discount, but we're not going to get ripped off. And so these American firms could easily transfer ownership. That is one way to stem the tide. However, we don't know to the extent, the amount of real estate that needs to be picked up by these Chinese firms. Now, I'll go on record saying that it would be great, in my opinion, if Chinese firms had to sell their real estate back to American firms. I'm all for that because I want to see at least the property ownership stay in America. However, I think that we have way too few homeowners in this country, but that's a whole nother video. And let's see, we're not going to get into reverse repos. Well, you know what? Actually, this would be, let's end on this. This is a big deal. Again, this is from Jim over at Wall Street Silver. They're starting to make a video game about this, and the reason why is reverse repos just hit an all-time high of $1.224 trillion. And as you can see, it is continually going up, just up, and up. So we have our own issues to deal with here in America. And I think that this is something that people need to start thinking about. Remember, I said that we're going to see a lot of inventory hitting the market in the next few months. We've already doubled in my area. I think we're going to triple in the next 4 weeks. But then coming into next year when these forbearance issues are really being, they're putting essentially on the chopping block. It's either sell your house right now or we are foreclosing if you don't have the money to come up with it. What you owe, or we're going to refinance you at 40 years at a fixed rate of like 5.5%, essentially adding an additional amount that you pay on your house. So instead of paying for your house twice after you make the minimum payments, you'll be paying for it 3 times. So it's not looking good. I will be honest with you guys. This isn't financial advice, trading advice. This is just what I'm seeing in the market. I think you're going to see either way, I think you're going to see a lot of inventory hitting the market in the next 8 to 12 weeks. I think January is going to look totally different in the markets. It's an exciting time to have some money on the side and be prepared because this is when people, quite frankly, start to lose their minds. And you could see that happening right now in China. I mean, we're going to leave on this. That's what it looks like. That's what panic looks like. All right, guys. That being said, I thank you so much for watching. The Economic Ninja is out.